Good morning, everyone. Welcome to the 24/7. My name is Niharika Valia, and I am with you with the area of JAIIB. So today I'll be talking about the accounting and financial management for bankers. So continuing it further today. So let's talk about this particular topic. If I talk about the AFP, we have got 60 days and 60 days and 60 classes, right? So that is what we are starting with this further today. Okay. So in the concept of 60 days and 60 classes, we'll be talking about the area of AFP altogether. So I'm starting with the next question today. Here comes the particular question regarding the accounting cycle there. It says when the balance as per the CB is starting point. See, if the cash book is given, and in terms of that, we are given the starting point. In the reconciliation, the amount of check issued and not presented are. The point is, in this question they have stated that okay, in the balance as per cash book, this is actually the BRS, where they have specified that the balance as per CB is given, right? That is the starting point. In the reconciliation, the amount of checks issued and not presented. What happened is, we have issued a check and it is not presented. I thought someone has taken the money. This is my cash book and this is my passbook. I thought someone has taken my money, but that particular person, this is my cash book, sorry, cash book believed that that money is taken by someone, but the passbook said that person didn't even turn up. What are you doing exactly? So what I'll do is I'll add it back again, right? So in this case, the correct answer is basically added. The situation looks like this. One is the cash book and this is the passbook. In terms of cash book, I thought I issued a check of rupees 1000 and that particular person would have taken that 1000 rupees, but he hasn't. So what I will do is, the passbook said there is nothing like that, that person hasn't taken out the money. So I will have to add that 1000 again, right? So let's move on towards the next question. The next question says that the entry to to transfer a balance from sales account to the revenue account is known as closing entry, prime entry, unnecessary entry, or double entry. The entry to transfer the balance from sales account to the revenue account. We had a sales account and then we take it to the revenue account altogether. That means we are ending that particular books of accounts, and when we are ending certain books of accounts, it is called the closing entry, the entry which specifies the end of everything. That is called the closing entry. In this entry, we provide whatever the details are for that particular organization, and they are closing their books of finances for that particular year. That means for the financial year, we can say the currently we are talking about 2022 23. Whenever we are closing the books of accounts, it would be called here in terms of this area whenever we are done with the profit and loss account and the balance sheet. So whatever is the final position of that organization, that will freeze and will move on to the next year. The entries which are doing at the end are called the closing entry. Now, the next point is, which of the following statements are true? The financial statements are only interim report. The financial statements are also known as annual records, and financial statements are historic. Among these, which is actually true? Only 1 and 2, only 1 and 3, only 2 and 3, or 1, 2 as well as 3. Which of the following statements are true? Which of them is actually correct? Financial statements are only interim report. They are only and only interim. That means they are not for the complete year. That is wrong. That is for both. The financial statements can be or annual records, or it can be the interim reports, and it can also be historic in nature as well. So in this case, the correct answer is only 2 and 3 are correct. First one is not correct, because there is never a concept that financial reports are created within an year. I'm sorry, it is not something which would be created within an year. It is something that is created for an year. It can be created for a less than year in order to find out the books of accounts are going good or not. Next point, AS10 deals with what? Fixed assets, or we can say the depreciation accounting, consolidated financial statements, or the accounting for taxes on income. If I have to specify this particular topic, it would be like the accounting standard 10 deals with. See, earlier there was a particular standard called Accounting Standard 6, which related to depreciation accounting. This particular standard is also a part of Accounting Standard 10. But don't think that it is the depreciation accounting that is the main account that is to be dealt here. It is fixed assets. That is something that is to be dealt with. It is property, plant, and equipment that they are talking about. So, according Accounting Standard AS10 deals with fixed assets. It deals with the topic of fixed assets altogether. So in this case, the correct answer is in terms of the new name for this particular standard, there is one more name that is coming up that is not confirmed yet, but then it is currently called PPE. That is, it includes property, plant and equipment. Why not fixed assets? Because the fixed assets would include tangible as well as intangibles. The intangibles are covered under AS 26, that is valuation of intangibles is covered in this area. Right? That is the point. If the intangibles are covered in this area, so the fixed assets would include only and only the tangibles in AS 10. That's why it's called property, plant and equipment. Next point, the prime entry for reversing a discount allowed to a customer would be the journal, the credit side of cash book, the sales day book or debit side of the cash book. The prime entry for reversing discount. If we want to reverse a discount, what would be the scenario then? The prime entry for reversing a discount allowed. We had a discount and the prime entry for reversing the discount allowed to a customer would be journal, credit side of cash book, sales day book or debit side of cash book. If whenever we are reversing a discount, then it would be like it won't go into the sales day book, and on the credit side of cash book or debit side of cash book, see, this is discount allowed. Discount allowed is technically expense which was booked earlier, which would now be reversed. So if this expense would be reversed, then there is nothing to do with cash book, there is nothing to do with any side of it, because there is no movement of cash. But we are right now considering the fact that discount that we allowed earlier is now being reversed. So debtor is again becoming our debtor, and the discount that we allowed earlier is now being reversed. It is discount allowed being credited, debtor account debited to discount allowed. Next question. A building worth rupees 35 lakhs was purchased and it was dismantled with 1 lakh, and it was decided to rebuild, to build a shopping mall on it. The cost of construction of the building was 50 lakhs and expenses were of 50,000, and the amount of capital expenditure is, there was a particular building that we purchased for 35 lakhs. So technically the plot of land that we have purchased is of 35 lakh. And on that 35 lakh, see, if I want to make something out of it, I'll have to dismantle the earlier things. So what I did was I dismantled that particular plot. So I cleared up the entire plot of land which was earlier having a building existing on it. Without breaking down that building, I couldn't create the shopping mall. So that means this is an essential expenditure considered for that particular asset. Then I built a building of worth rupees 50 lakh there, plus we also did 50,000 rupees as an expense, which is again indispensable. In order to prepare to construct that building, I need to go through these expenses. So technically all of these qualify for capital expenditure. So it would be 86 lakh 50,000. It is basically 86 lakh 50,000. This is not correct. It is 86 lakh 50,000, because that 50,000 is also important. This all expenditure is made till the time that asset is ready to use. Basically the scenario is you will capitalize all the expenditure till the time it is ready to use. Terms of income tax as well as accounting, there's just a minute difference there. Just letting you know that is there in terms of the practical world. In terms of accounting, we take it till the time we actually put to use. While in terms of IT or income tax, they take it when it is ready to use. After that, they stop. But in terms of accounting, we can still continue with the put to use area. But in your examination or any examination of that sort, they do not go through the practical point. That's whenever I'm telling you about the capital expenditure, I'll always say by the time it is ready for use, you can take that particular expenditure. The moment we start using it, then the scenario would change. And the question will always give you the information like that, that till the time, okay, I bought a particular AC and then I've gotten it installed. Now it is ready for use. Once I start using it, the depreciation will also start according to that, right? So you'll understand that the capital expenditure, you are not using that thing, right? That can be called as a capital expenditure. The expenditure we are incurring on our the expenditure that we are incurring on our goods there, sorry, on our assets to build up in a proper way so that we can earn more in the future. Then comes the reserve capital. Reserve capital means the part of subscribed uncalled capital, accumulated profits, the part of CR or capital CRR, the part of capital redemption reserve. Reserve capital is the capital that we have kept in case the organization is dying, right? If the organization is dying, then we use this particular capital for our future. That is what we define as reserve capital. The reserve capital is basically that capital which is kept that if the organization is dying, only then we will call it for liquidation. Liquidation means when the organization is dying, then we call for this particular amount. Otherwise, we will not call for this particular amount. That is where, in terms of liquidation, it is the part of the subscribed. It is already subscribed by people, but we are not calling that particular amount because we are keeping them for the last. That means when the organization would be exhausted from the resources, they won't have resources and they want to pay off their debts at least. So then these people would be called to settle all the debts before the organization is completely winded up. Those preference shares which do not carry the right to receive arrears of dividend. Preference shares are those shares which have a preference over equity in terms of dividend as well as in terms of liquidation. Whenever there's a liquidation scenario or the dividend scenario, they will always get the payment before equity does. So equity is the last person, equity shareholder is the last person who gets the money or the chunk of that particular amount from the business, be it in terms of profit, be it at the time of the death of the organization. Even at that point of time, preference is standing in ahead them and looking forward to their money. So these preference shareholders which do not carry the right to receive arrears, what happens is in one particular year they got little money, the next year they got more money. This can happen. There was a profit in first year, then there was insufficient profit in the second year, and then they had loss in this particular year, and then they started huge profit from this particular year. What is happening is in this particular year they had profits. Here they couldn't give proper profits to the preference shareholder. There they couldn't give it to these people at all. So in this year they will give the profit or the dividend for first year, for the second year, for the third year, and also for the fourth year. This is what they call it as cumulative. That is where the profit or the part of the dividend becomes cumulated, and if it is not being collected, it is called non-cumulative preference shares. Right? The correct answer is non-cumulative preference shares. Interest received by finance companies classified under which kind of activity while preparing a cash flow statement? If we receive interest by a finance company, then what is it? For a finance company, receiving money is not a problem. They will receive money in any case. Won't they? They will receive money in every case. Then is it operating, is it investing, or is it financing, or no cash flow? If we talk about interest received, it is the amount that the organization is receiving for their day-to-day activities. Because for a finance company, investing and financing is not a problem at all, right? For them, it is their day-to-day business that they're dealing with. So when they have this kind of money in their hands, then such a money would be called operating activity. That is their day-to-day business. So it would be called cash flow from operating activity. Next, an amount of rupees 8765 paid to M was debited to N's account. The rectification of error will increase the net profit, decrease the net profit, increase the assets, or have no effect on the net profit. In this case, what's happening is an amount of 8765 paid to M was debited to N. What was point that we had paid to M? M to cash. What's the point? M's account debited to cash, but somehow we noted it as N's account debited to cash at 8765 and 8765. The amount is absolutely correct. The problem is only related to this particular account. So what is happening is, will this amount increase the net profit, decrease the net profit, increase the assets, or have no effect on the net profit? See, these are this is the money that we are paying to a creditor. Maybe it's a creditor itself now. So because if we are making the payment to the creditor, or if even if we gave money to someone as advances, now that can be something which can increase the assets, or maybe we cannot say with certainty that one particular account would have increased the asset or decreased the asset, but definitely it has no effect on the profit. Why? Because debtor and creditor will never ever affect the profit. These people would be settling their accounts through the balance sheet. What are they doing in the net profit? They will neither increase nor decrease the profit. So technically they have no effect on the net profit. Always remember, if we are to pay to someone or we are receiving money from someone, that particular thing will never giving everyone. So this is it for the day. If you're preparing for this examination, then kindly go ahead and check out our courses. We have come up with new courses for the various sources, and at the same time, if you are taking our courses, what you can do is you can go on to our organization. That is, you can go to our platform www.adda247.com, and once you go to this area, just go to the area of JIB and CIB, and here comes the JIB 2023. If you want to look forward to towards your batches, as you can see, we are coming up with new batches. We have just started a new batch that has started on March 16th. That is regarding JIB selection batch, which includes PPB, IE and FS, AFM as well as RBWM. The batches have just started. That means the classes of AFM is at 7 to 8 p.m. The RBWM is at 9 to 10 p.m. IE and FS is 8 a.m. and 8 to 9 a.m. The next one is for 6 a.m. to 8 a.m. Right, so you can take up all the courses regarding this for different timing altogether. What you can do is you can click on the area of buy now. You can use the code Y541 and you can apply it. There you will get 81% of discount along with validity of 6 months. So if you're preparing for it at this point of time, it is giving you 81% of discount. This particular batch will cover 200 hours of live classes, along with you are getting 73 ebooks for your preparation. And if you're looking forward to batch, that will also give you revision batches, which will also cover the MCQ batches, or power pack batches would be there, plus test series would be there. So if you're looking forward to such kind of benefits, then you can look forward to our JIB Kamaha pack or JIB and CIB Kamaha pack. In terms of JIB Kamaha pack, you'll get everything regarding JIB, and if you are being futuristic there and you want to take both JIB and CIB, in terms of economic prices about that, I think JIB and CIB looks more beneficial as a student, and as a point where I'm looking forward to, I have to prepare for JIB, and after that, why to wait? Let's go for the CIB as well now, because when you are in the flow of studying, it becomes easier to continue. Otherwise, it becomes more and more challenging. So what you can do is you can take up the JIB and CIB Kamaha pack. Under this, you get live classes, you get test series, you get videos, you get ebooks, and whatnot. The point is, you get a validity of 2 years as well. You'll have to pay for 1 year, you'll get 2 year validity. This 2 year validity means that if you're looking forward to the JIB, you don't have to think again. one particular batch taken up, and then it will benefit you, and it will give you a point where you can take up the batches, and this will give you an edge over others, because you will not only get the selection batch which is related to syllabus, but after the completion of syllabus, if there's any batch that is coming up regarding MCQ series, numerical batches, or any other par or revision batches, whatever batches we are coming up, case study batches, and even the recorded videos would be available for you, both in terms of bilingual as well as English medium. Both the batches would be available for you. Topic wise ebooks are available for you. Test series is opened up for you, mock test, as well as the video solutions are also there. So if you're looking forward to this particular case, this is definitely a value for money scenario, because the price of this would be, use the code Y541, and there after 81% of discount, this will cost you 10,799.20 rupees. But that is for 2 years, not for 1 year. That means technically you are not even paying 500 per month if you're taking up this particular course, right? Because otherwise, if you have to look forward towards charges, then the per month charge would be less than 500 rupees. It would come out to be near about 450 rupees per month. Then this is more economic. And at the same time, you are getting a particular course where entire information, not only for JIB but also for CIB, not only in English but also in the bilingual era. So if you're preparing for it, then kindly hurry up and go for this particular opportunity where you're getting 81% of discount along with double validity on our Maha packs. So kindly check it out on our website or in our app for further details. And let's continue further this journey, and every single day I'll be covering more and more questions, and now I'll be starting with the mixed areas so that you get an edge over others in terms of your